Hello and welcome to the Friday edition of the Sharesify podcast. As always, I'm joined by James and Steve. How are we, guys?
Very well, thanks.
Yeah, and it always happens, doesn't it? We talk about markets being at all-time highs on a Wednesday, and then it all goes a bit Pete Tong, and things come off again. Kospi's down quite a lot from its high, actually. S&P and Nasdaq have just rolled over a tiny bit, but anyway, there we go. That's where we are at the moment. James, you've had your eye on the trust this week.
Yeah, very busy week for Trustee, and so lots of results out and some interesting pods. Today we've had Murray International, so this is the Global Equity Income Fund. Slightly underperformed the benchmark in the first half, but you probably expect that because this was a period dominated by the AI trade. Murray International has very much got a value tilt. But the good news is they delivered capital growth ahead of inflation, which is part of the remit. Interesting, we've done a detailed note on Murray International, and we had a podcast chat with Samantha Fitzpatrick. So do check those out on the website. One trust that did outperform its benchmark was a very popular Allianz Technology Trust. So stock selection across semis and mid-cap tech stocks that more than offset volatility among the AI mega caps. And it really, I suppose, underlines that this is a very well-managed trust, kind of justifying the active approach.
Yeah, absolutely. That's a really good point, James, because I do think there are lots of Me Too trusts out there now at the moment with big holdings across the sort of AI trade space. And I think what Allianz have shown is that over the period, it's about their stock picking abilities that are really shining through. And you think this is a very tight, condensed portfolio. So you're really putting your faith in the management, and they outperformed the benchmark almost twice as good. So really impressive.
Yeah, excellent stuff. Yeah, we also had Seraphim, didn't we? Deployed those first C share proceeds into two existing portfolio holdings. And then just in terms of the podcast, me and Steve, we had a very interesting chat with James Tom, Aberdeen New India Trust. And earlier in the week, we had Emily Whiting back on, and she was talking about JP Morgan, emerging markets, growth and income. So listeners, do check those out.
Yeah, absolutely. We've got a feature coming, be published today. It's all about trusts that are focused on India. So if that is something that floats your boat, the Nifty 50 has been a little bit wobbly in recent weeks. So actually well worth tuning into to James Tom's podcast to find out, what he thinks about the wobbliness and where he thinks things are going. It was a very good podcast, definitely.
But you had your own US tech, as James says. It's been a fantastic half for tech, of course, and that's carried on with look at the results that we've had this week.
Yeah, I mean, these are really big holdings in most retail investors' portfolios, if not directly, then through ETFs or through active funds. We were talking about Palantir, struggled a bit. Palantir went absolutely bananas, up about 15%. We also had really good results from Microchip today, but on the downside, AMD struggled a bit, largely because expectations were just a bit too high, and while they beat forecasts, ultimately investors kind of wanted that bit more. And we've also had SanDisk, very similar story. Expectations just so sky high now, it's almost impossible to beat them. And AppLovin, now this is an interesting company based on the fact that it's one of Terry Smith's new holdings. Fundsmith, we talked recently about how he's transitioning his long-term strategy to dive into some of these more momentum-driven trades. AppLovin has been a recent acquisition for him, but it really kind of died a bit of a death, really. And again, it's just about expectations being set so high, it's almost impossible for management to kind of not only beat but then exceed again. So it's really tough benchmarks to hurdle.
Yeah, here, James, you've been watching the consumer names again.
Yeah, so we had another upgrade from Next, that got that reputation for under promising and over delivering. A really strong reaction to Diageo. So this was Dave Lewis, Drastic Dave. He set out a plan for turning the business around. He's aiming to deliver about $1 billion in savings over the next 3 years, and he's cut the final dividend. So radical action. I think investors also liked his path to outperforming a tough spirits market. Excited about the potential for Guinness. So really interesting stuff on Diageo there.
Yeah, I mean, that's an interesting one. I wonder if his name should be Dynamic Dave. I mean, we see how the share price turns around. But Ian, you've had your eye on M&A a bit this week, haven't you?
Well, turnarounds as well, Steve. I was going to say, if you talk about turnarounds, media stocks have had a cracking week. We had S4 Capital, run by Sir Martin Sorrell. Now, he used to run WPP, obviously. He set up this business, S4 Capital, a digital-first media agency business. Stock went up 20% on results. And the next day, WPP goes up 25% on results. Now, with both of these, there's a good degree of self-help. They are turnaround stories. But what's really interesting for me is business is coming back, demand is coming back. And what WPP said was very interesting was companies have been throwing money at AI, and so they've been reducing their investment spend. But does it get the same kind of return as advertising? And I was looking at this. If you take a firm like L'Oreal, okay, they spend a quarter of their revenue every year on advertising. So that business hasn't gone away, but other companies that have been maybe diverting some of their capex towards AI, now starting to divert it back. And
Yeah.
that leads on to the M&A story, because of course we've had System1, which I've been following. It's really interesting business. They look at the emotional pull of advertising, and their clients are most of the world's biggest brands. Brave Bison owns 28%. They've had 3 attempts to buy this business, and System1 have turned around and said no. What have we had this week? Harworth Group, another one where the biggest shareholder has said we want to buy this business. Again, about 28-30% shareholding. And then today we get out the blue, DNO, the Norwegian oil company, announces that it's made a bid for Genel Energy. Now, this is a bit more of a there's a bit more of an opportunistic situation here where Genel Energy shares used to be 10 quid and, they're now sort of 50p. And I suspect that DNO, because they work together in Kurdistan, I suspect that it has good inside track on the business. It's waited and waited and waited for the share price to go down. Made an offer at the end of July. Company said no. I think they've offered 69p roughly. So the shares have responded well today, but I think there's a lot further to go. To be honest, when you look at where the share price of Genel was, it was higher than 69p, in the last year. So I reckon that one is just sit back, watch and wait. But yeah, busy time.
Yeah, so listeners, we're going to come on to that part of the show now. It's a new segment. It's where we talk a little bit more in depth about a single stock of the week, if you like. I know, SpaceX is going to be the one, right? You get bulldozed with SpaceX.
It's got to be though,
talk
Steve. It's
and
got to
writing
be.
and so on. We do apologise, but we do think it's where the interest is at the moment. Now, these are the first earnings as a listed company after its world record IPO. Now, let's just look at the headline numbers. It beat on revenue. Its net income losses were better than most of the market expected. Starlink revenue certainly ahead of market expectations, as were Starlink subscribers. AI revenue, obviously a big part of the longer term story at SpaceX, very much beat $2.6 billion worth of the quarterly revenues from AI. So really interesting that the operational side of things seems to be going certainly in the right direction. The big question mark, though, for investors was CapEx. Now, we've talked about CapEx across the hyperscaler space in particular. We've written about it in depth and why it's such a worry for investors. Now, SpaceX spent about $18.3 billion on CapEx. Market expectations were for around 13 to 15 billion. So it's a massive chunk of change they've lashed at the market. They've lashed at investment over and above expectations. Now, how do you value this business? Well, my word, stick your finger in the air and see which way the wind is blowing. It's almost impossible to put a value on this because we are not talking about earnings 18 months, 2 years, 3 years, even 5 years down the line. We're probably talking about a story that's going to run 7 to 10 years before we really get a sense of what SpaceX can really do as a business. So is it worth the current share price? Who knows? What we do know about the share price is it's below the IPO. The IPO went at $135, remember? It's down at about $115 now. So you have to decide whether or not that's coming back to a more reasonable level, or is it still hugely inflated? It's been peaking at over $200 right after the IPO as loads and loads of retail investors piled into the secondary market. It's going to be a volatile journey. We warned investors that that was likely to be the case, and I don't see that changing over the coming months, simply because there's such a lack of guidance. Investors and analysts, they really don't know where to pitch their forecasts. So in 3 months' time, we'll get more earnings, and we're likely to be as in the dark as we are now. So that's realistically where we sit with SpaceX. Talking about next week, and I think James, you've got your eye on a few things going on.
Yeah, we've got a trio of gaming stocks. We've got Evoke, Entain, and also Rank Group. But the one I'm most interested in is Tapestry. So for listeners who don't know, this is the owner of Coach and Kate Spade. They give a really good read on the kind of affordable luxury market and how that's performing. Actually, the FTC kiboshed the Tapestry merger with its smaller rival Capri in 2024. The shares have absolutely motored since, so I think they'll deliver some good news, or the shares could get punished.
And that ties in neatly, James, with the fact that the Bayeux Tapestry is actually coming to the UK for the first time, I think, in years and years and years. So
like
that's apparently launching in September. Ian, what have you got your eyes on next week?
So, Steve, next week we've got Bellway coming out, and we've also got a couple of building materials stocks, Genuit, which is the old polypipe, and Marshalls, the landscaping materials business. We've also got infrastructure coming out, Balfour BT, we've got Costain, we've got Hill and Smith. But the one I've gone for is Spirax. Now, people will know it as Spirax Sarco in the past, now just plain old Spirax Group. Quality compounder, I mean, one of the high returns, great market, growing organically and so on. Always been expensive, and actually post-COVID, when there were supply chain issues, the price went nuts. It went to kind of 50 times earnings. Demand was so high, and they could price it at whatever they wanted, price their goods whatever they wanted. But the valuations come back to a more modest 25, 26 times, which is about the middle of the historic range. Fascinated to see what they say. They did actually, their aim is to grow faster than industrial production globally, and they managed that in the first half. But typically the results are second half weighted. So I think that'll be an interesting one to watch next week.
What we
What
used
have
to
you got
say in
your eye
journalist,
on?
what we say in journalistic terms is reassuringly expensive. It was obviously
Reassuringly
it
expensive,
was a term that
Steve,
got
yeah.
bandied around companies like Halma in the past, and I think that certainly applies to Spirax. We've got a really busy week again next week with more tech, but we are winding down. But Cisco are on deck. We've got Applied Materials, which you wrote about recently, Super Microcomputer. Plus we've got some really hot stocks like Rocket Labs and Nubius. There's edge computing firm. So it'd be really interesting to see how they do. But the one my eyes have landed on is CoreWeave. That is AI infrastructure. It's really expensive. It's really rapidly growing. Be really interesting to see if they can match these really high expectations or even surpass expectations. I mean, that's really likely to drive the share price either lower or higher. Is it going to raise guidance again? And is it going to be really optimistic, or is it going to find that it doesn't really want to inflate the market expectations too much? You might see the share price weaken over time. I guess, guys, that's about all we've got time for, isn't it?
Pretty much, yeah.
Marvellous. It's well worth having a chat, having a think about what you think of our fancy shirts, and also have a look at our podcast, have a look at our website. We've written loads and loads of stuff. We've only sort of brushed over it on this podcast because we're under time limits. And also remember, we've got in November the 6th, we mentioned it on Wednesday, the Sharesify Wealth and Retirement Show. It's available to all comers. We've got a capacity of about 200. Get your tickets in now. There's a discount code podcast, so all caps podcast, and you can get the ticket for half price. So that's from 30 odd quid down to 15 quid. We've got an array of different talent on deck. James, AIC are going to be there, aren't they?
Yeah, that's right. CEO Richard Stone will be there, and who else, Ian? I think we've got a few other names, haven't we?
Well, we're adding them bit by bit. Yeah, there's the panel list is looking very, very interesting indeed. And of course, we've got Laura, as we mentioned before, Laura, who runs Lauder Bencher in Lowland. We put that on X, and we've got 57,000 views for that one post alone, chaps. So
Right.
if that's any indication of the interest, are we standing room only?
But remember, listeners, if you're in the UK and certainly in the Southeast, it's a London-based event. So you've got a slight advantage over anyone that's in LA or Hong Kong. So
Yeah.
get your tickets in quickly. We don't want you to be disappointed. Anyway, that's about it from us. It's been a busy week and we look forward to another busy week next week. And please join us again for more podcasts from us at Sharesify. Have a good weekend.
Bye for now.